So today I'm doing my most popular video series that I do on the channel, which is the stocks I'm buying series. So this is where I talk about all the stocks that I have been buying. It just keeps that transparency up so you guys know the moves that I'm making in the stock market. I've done this video series for many years now on the YouTube channel, and like I said, you just know what I'm buying because it's on this list. If I've sold anything, it's on this list, and it's a lot different from what a lot of other stock market YouTubers do out there, which is where they potentially buy something and they don't tell you, then all of a sudden they're up 100 or whatever percent on it, and sometimes they'll buy something and then they'll sell it out quietly in the background and they'll never tell you and never mention it again. We don't do that on this YouTube channel. We go for transparency, so any moves that I make are on this video series. I'll do my UK one in a few days time, and like I said, these are all the stocks that I bought from the 1st of March to the 31st of March to keep you guys updated. So I hope you enjoyed the video. Let's get started. Now, as well as that, if you do want to know what I'm buying and selling in real time, the place to be is on the Patreon. I let you know in real time the moves that I'm making on the stock market account on there. And as well as that, I give you 2 exclusive videos a week on there. We have just posted 2 exclusive videos a week. I'm actually going to post a 3rd one probably shortly after you're seeing this video. So this week there's actually going to be 3 on there. So if you do want to support the channel, join through the link in the description, £5 a month. There's 500 members on there to talk to about stocks on the Discord as well, including me. And if you do want some free shares, join Trading 2 with the link in the description. That's personally the broker that I use. If you join through that link, you'll get a free share worth up to £100. Now, for this month, it was actually a pretty quiet month. I wasn't really selling anything, and buying wise, I weren't that active buying on the US side. I was a little bit more active on the UK side of it, but on the US side I only bought 4 stocks, and these 4 stocks are smaller market caps, and I'd say definitely more higher risk stocks. I would put 2 of them more in the higher risk end, and I would say the other 2 are more medium risk. So yeah, I was definitely looking to more risk on stocks during this time period, because small caps is where I'm seeing most of the opportunity, and more international exposed stocks is where I'm seeing the opportunity as well. So we'll get onto these stocks. The first one is Dlocal. So Dlocal had a big drop off their earnings, as you can see here, and I was quite surprised. I was actually really impressed with the earnings, and as I went through the conference call as well, I was more and more impressed with this stock, which is the perfect combination because I'm more bullish on the stock than I was before earnings, and yet now I'm getting the stock at cheaper prices. So this was a opportunity that I really liked. So this is a relatively new position into the portfolio, and Dlocal manages payments for big companies in emerging markets. They take on the risk of a more volatile market, as well as other things like preventing fraud payments, and they do this for big companies. So if you look at the clients they currently have at the moment, they have the likes of Amazon, Shopify, Microsoft, Google, Spotify, Uber, Tencent, Shein, lots of big businesses, as you can see here. And the thing is, when you have companies like Amazon willing to use your product, it's not easy or overnight when Amazon selects their partner for using these payments for managing in fast growing e-commerce markets like they are. So I am really happy to see this client list and see the amount of clients that are growing on there. And as well, you know, these markets that Dlocal are in are fast growing e-commerce markets, the likes of Brazil, for example. If you go on the recent earnings and you look at what Brazil was growing at, and the likes of Mexico, for example, very, very impressive growth rates, and will continue to grow for many years. Now, what I also like about this company is they also appointed the former Mercado's CFO, Pedro Arn, as their new CEO. So I think this is a big sign of intention, appointing him as the CEO. Obviously, he has a very good experience in this space, and also he's been part of one of my favorite investments and a very successful investment, Mercado Libre. I also own shares in Mercado Libre, and they've done amazing. I think him moving to Dlocal says how much potential Dlocal has, and how much he thinks it will do very well. The fact that he's willing to move away from the CFO role at Mercado Libre to move to Dlocal to be the main man. And actually, when I was listening to the conference call in the recent earnings, I think that you were starting to see the signs of Pedro Arn coming in as the CEO. Obviously, this was something that happened in the middle of last year, and he's getting towards half a year now into that role. And when you listen to the conference calls, it's like listening to a Mercado Libre conference call now. Very good. The information he was giving, very good. The way that he was coming across was very impressive as well. And like I said, when I looked at the numbers, I couldn't believe the stock had dropped off these numbers. Now, granted, there was an EPS missed. However, that was a lot of it due to the FX impact, and I just think analysts at all were a bit lazy and never forecast an EPS hit with an FX fee, and that is probably the big risk with the stock, is the FX situation. But when you're a company that's growing at the rates that they're doing, Total payment volumes up 55%. You can take some FX impact. And even on the EPS point of view, yeah, it might have missed. But the big thing is not looking at what analysts are doing, and analysts are getting it wrong by a little bit every kind of quarter. When you zoom out and look at the bigger picture, which we'll actually talk about in a little bit, is when you actually look at the long-term picture of all the numbers moving in the right direction, all the profitability moving in the right direction. The EPS was actually from, I think it was 0.06 last year to 0.10 now. So the EPS is still massively moving in the right direction, which is the more important thing to me. And what seemed to get no credit at all is when you actually look at the revenue beat, the consensus was 173 million and it actually came in at 188 million. This is no small beat on the revenue point of view, and yet it was just all kind of ignored. And ignoring the fact that this business is currently trading at what Seeking Alpha says 23 times earnings. 23 forward times earnings for a company that this year is forecast to grow 40%. The EPS is forecast as well to go from 0.57 to 0.62 in this FX interest environment as well. And when you're listening to the conference call as well, this company's throwing off mega growth, mega profitability, and when you look at the balance sheet as well, the company sits on no debt on the balance sheet. Obviously, they're throwing off this a good amount of profitability. They're sitting on 638 million of cash, nearly 15% of the market cap now. And there's the actual new CEO, Ehang, was actually saying we probably need to start looking at deploying this cash somewhere. That's either going to be through dividends, through share buybacks, which also is another big reward here. So yeah, I think you're getting Mercado Libre 2.0 here with this. Obviously not as good as business as Mercado Libre, but showing a lot of the same signs that Mercado Libre is showing. So yeah, I do like Dlocal here if you can look past the FX impacts that it could take because it operates in countries that have maybe a little bit more volatility, but apart from that, the numbers are still very impressive given all of them factors at the moment. The next one is PDD Holdings. So yeah, I mean, the only risk that I have with this one as well is that obviously it's a Chinese business. Obviously people can be a little bit avoiding of Chinese businesses, and maybe they don't trade at a premium valuation as like a US company does. But even with that consideration here, I think this is something that you just can't ignore with PDD Holdings. So the main thing that they used to do is they operated Pinduoduo, but that's not the reason I bought. The reason I bought is the recent expansion by launching Temu. Now, they only launched Temu about a year and a half ago, and it's taken over the world. If you look at most of the app stores, if you go on the US stock chart, the app chart, sorry, I keep saying that. I've got to stop saying stock chart. App chart, I just say stock chart so much. If you look at the US app chart or the UK app chart or any of the new countries they're launched in, Temu is sitting at number 1 in the world at the moment. They're expanding absolutely huge. They keep moving into new areas like the Middle East, for example. And also in the US, they keep expanding in the US. They're actually looking at taking on US sellers onto the platform. This is the first kind of big rival that we've ever seen that could potentially take on Amazon, which is scary when you start thinking about that. And you're looking at this company here, and it's currently sitting at 154 billion market cap. It's got a lot of potential for it to go and expand more and more. But Temu, obviously, they're offering cheaper products, which obviously in this macro environment, people are a big fan of cheaper products at the moment. And also with having vast cheaper products here, you've got a good selection with good deals, and also they still make it up on the profitability side of it as well. When you look at the numbers side of it that they've just brought out, the EPS was a beat by 0.75 on $2.40. That's insane. I don't think I've ever seen a company, even Nvidia, when its AI boom started, I don't even think their EPS was that impressive. When you look at the revenue, 123% year-over-year growth, beat by 1.6 billion. And you're picking this company up at 13 times forward earnings. 123% growth, being at this EPS 113 times. It doesn't make. That's probably been the most frustrating thing, because actually when these numbers came out, the stock was up like 20%, and it should have been up over 20%. But yet it actually ended up giving it all back after these numbers, and it's actually gone lower as well, which is crazy. To be doing these numbers at these sort of valuations, even if you put like a bit of a safety net on because it's a Chinese company, it just doesn't make sense why it's so low. And that's been a little bit frustrating as a shareholder, is that you're seeing these numbers come out and yet the share price doesn't get rewarded. Now I think if it keeps doing these numbers, it will eventually get rewarded, but there's something strange going on here. And when you look at the numbers that for this year as well, the EPS is forecast to go from $6.43 to $8.75. If you look at the revenue growth, that's up 51% this year. Now, if you actually look at where the analysts were 6 months ago, so if we just flick back here on Wayback Machine and go to the same page on October the 12th, as you can see here, the average estimate was $4.09. And like I said, we've now actually upgraded, $5.98, and we've now upgraded to $8.75. That's nearly a $2 upgrade. In fact, it's nearly a $2 upgrade, which is crazy. You look at the revenue growth, the analysts were forecasting 6 months ago 27% growth this year. They're now upgraded to nearly double that, 51% year over year. And then you look at the stock since October time, and the stock's only up 10%. It's got some reflection there, but it's nowhere near what it should be. 13 times forward earnings, I just think that's absolutely crazy. And then you look at the growth of the business, it's just absolutely rapid. And look at the profitability they're throwing off as well. Leaves them with a good balance sheet, as you can see here. 3.1% debt to equity, 217 billion yen in Chinese yen in cash, which is great. The only thing that frustrated me is that when I listened to the conference call is that they didn't say that they were going to do a dividend or a share buyback at any point, which I think they should do at these sort of levels. The only thing that I can say is that the numbers are that good that the only thing I have is that the company's fraudulent. That's the only risk that I see. Obviously there's the Chinese risk there, but if it's not, then this is looking an absolute bargain here. So I did pick some PDD Holdings up. Next one was Sofi. So Sofi it's crazy, Sofi, isn't it? It's such a volatile stock. It goes up off earnings and then it just gives it all back. And unfortunately, there's a lot of shorts around Sofi. And my big thing is that it's disrupting the big banks. And the big banks control the big money, and they're trying to punish Sofi from the share price point of view because they can't punish them financially because Sofi are taking big share from them. But it's creating good opportunities, and if they keep doing the numbers that they're doing, I think Sofi will do very well. Obviously, the more traditional, they're going to the younger generation at the moment by offering all these products for very good rates, all on an app, and obviously no high street presence as well. So that means they're more profitable. Personal loans, banking, mortgage loans. You look at some of these as well. Imagine what's going to happen when we have a better economy as well. And also when a lot of the younger generation that's using this platform, as they get older and they start using more of the products or starts going into mortgage loans, for example, as they get older, investing as well, this is only going to grow. So, you look at the current numbers that they're doing, and the EPS is up massively from last year. The revenue growth is growing really good. The member growth is exceptional. The more they kind of start pushing them onto more and more products and cross-selling them, like the money platform, for example, the invest platform, the credit cards, all this is doing is that it's going to scale up the cross-selling and the members growth. And obviously when you keep offering a great product like this, it's only going to be a business that does really well. So I can't believe we're seeing Sofi once again going back at these sort of levels. It's kind of got that HIMS vibe around it. I remember when HIMS was very similar, and they kept bringing out earnings and it kept going up, and then it gave it all back within the next few weeks, and then we had the next earnings and it went back up again. It's a bit of a frustrating one to own, but over the longer term, like HIMS, if it keeps doing the numbers, it will get rewarded on the share price anyway. And the last one is a stock that I've actually not bought for around about 3-4 years, which is Ehang. I cannot believe I'm saying this, but I did buy some shares in Ehang. Now I'm going to say the exact same thing that I said 3 or 4 years ago when I first started buying this stock. This is high risk. This is the highest risk position in my portfolio. I am buying this stock with the intention that I am willing that I know that this stock could go to zero. I'm buying this stock and I know it could not work out, and I am accepting that is a high probability. At the same time, I'm buying this stock because I also think it has the potential to be a 5xer, a 10xer, 20xer if things go really right for the business. Now, I've got to say, since I have started buying, or when I did buy the stock is up massive this month. It's up nearly 90%. So since I bought these shares, it has been on a big rally, and I'm actually about break even on my Ehang position right now, just so you know about that. But Ehang, they do these unmanned drones, as you can see here. If you've ever seen the videos of them on YouTube, it's very impressive. And the whole theory behind these unmanned passenger drones is that they can be used for many things. They can be used for getting medical supplies somewhere quickly, as well as that the potential firefighting for high-rise buildings. Obviously, drones can get there very high to tackle a fire on a 60th floor or something when the fire is happening. Tourists, obviously you can go to a tourist location, take one of these unmanned passenger drones, fly around for 10 minutes, get some photos, you come back down. Also, the fact that transportation. Obviously everything's very busy at the moment, it's hard to get to places, and obviously with a drone you'll be able to fly into a direct line into wherever you would look to go as well. So there's potential a lot of other areas that they can move into going forward with these unmanned passenger drones. Now they have also received, as you can see here, the type certification, so this means that they are allowed to use these passenger drones as well, and they also have put their retail prices out. That seems to have given a few more confidence in people to start ordering these drones a lot more, and the next competitor to these guys is Jobber, which is actually worth like a 3 or 4 billion market cap company, even though it hasn't even got a prototype with any close hours to what Ehang is, and doesn't have the type certifications, which is crazy. But obviously it's a US company, so we put 4x the valuation rate, which is crazy. But yeah, because they are now starting to ramp up on the certification, the numbers have started to improve massively. Revenue was up 260%. Gross margins 64%. Obviously, with the way that they're charging some of these price on these unmanned drones, then obviously you are going to be able to make money, as you can see here. But also as well, because they are scaling a little bit more, the losses are coming down as well. So if you look at the net loss, for example, the net loss was down to 10 million, or on an adjusted net loss was down to 3.1 million on a US dollar basis. And if you actually look at the cash, they sit on 47 million. So there's not really any kind of risk now that the company is going to go bankrupt, because the losses are coming down now, and the cash balance is very high. The only thing is now the scalability, and that the people actually come in and start ordering these drones and start using them more and more. So yeah, obviously there's a risk that potentially the unmanned drones never kind of really take off, but if they do, you know, these guys are the market leader, and as the market leader with a actual factory that can mass produce these drones, when you're selling them at 100k plus a unit, it's not going to take long for you to start selling a couple of drones every month into, you think about all the tourist attractions in the world, all the places that would need something for maybe high-rise firefighting, medical supplies. It's something that would seem like it will do very well in the next kind of few years. So yeah, obviously, like I said, it's a very, very high risk business, this one. So definitely don't put it in a category like a lot of other businesses that I own. But I've got a very, very small allocation into it, which if it is successful, then it will do very well. But like I said, it might not do well. So it's a very, very high risk anyway. So yeah, those are those stocks anyway, guys. Hope you enjoyed it. See you in a bit.